On Tuesday, NVIDIA officially became the largest company in the world by market cap, with a market cap of 3.35 trillion. This is bigger than the market caps of Apple and Microsoft now. And NVIDIA's market capitalization is bigger than the stock markets of the UK and France. This is huge because NVIDIA's AI GPU chips are powering the fourth industrial revolution in terms of AI. NVIDIA is the pick and shovels play for AI right now because a lot of companies want NVIDIA's chips in order to help their software and to power their AI applications. So NVIDIA is the picks and shovels play right now, and this is huge. And then last night, it was announced that Dell, SMCI, and NVIDIA are collaborating to power Elon Musk's XAI, Grok's large language model, and shares of NVIDIA were up another 3.5% as of this morning. This is huge, and Dan Ives, tech analyst Dan Ives, says that the race to a $4 trillion market cap between NVIDIA, Apple, and Microsoft is on, and he thinks this is the a 1995 moment in the beginning of a fourth industrial revolution. And I kind of agree with him. Maybe I would say this is more of an early 1996 moment because the large demands we've seen in AI really, and the curiosity with AI really started in November 2022 with the release of OpenAI's ChatGPT. So I think this is a 1996 moment, but either way, we're in the middle of a fourth industrial revolution that'll likely last another 3 to 5 years, in my opinion. Probably will be a bubble and probably pop and lead to pretty significant drawdowns, but we don't have to really worry about that in another 3 to 5 years, in my opinion. And then Wall Street's biggest bear, Evercore's Julian Emanuel, he became the biggest bull. His price target was initially for the end of this year, $47.50, and he flipped, and his new price target is now $6,000, and his price target for next year in 2025 could be $7,000. He thinks this because of obviously the rate of increase for inflation's going down, but he also thinks that AI and the demand and the growth we're seeing for AI in terms of productivity gains will really power the economy and the market for the near future. And I do kind of agree with him. But my price target for the S&P 500 this year was 5,600. I'm not really going to budget, in my opinion. Could we hit his target of 6,000 by the end of this year? Possibly. But even if we hit that target, I still think that there could be a little bit of a pullback or correction, ultimately bringing us closer to 5,600 by year end. Obviously, we have a lot of uncertainties coming up with the election, so I'm still sticking with my 5,600. And then I wanted to quickly talk about Ethereum. The SEC dropped their case against Ethereum about deeming it a security. So this is good news because if Ethereum is not necessarily a security anymore and the SEC is dropping their case arguing for that, then Ethereum is effectively a commodity, which is what all the crypto exchanges and people in the crypto industry have been saying all along. It's like digital gold and oil. And right now we're getting ready for the SEC to approve the S1s for those crypto exchanges to allow the spot Ethereum ETFs to begin trading, which will likely happen in early July. So this is good news, and this is this shows that there's a strong appetite for crypto, and especially ahead of the elections, there's large pivots for both parties trying to be a little bit more crypto friendly. Obviously, we had the Bitcoin halving that just happened a little over a month ago, and historically, we're probably going to see, going back to Bitcoin price appreciation probably towards the second half of this year, and then next year should be pretty parabolic as well. I think this crypto cycle will end in late 2025. So the next year and a half should be pretty bullish for crypto in general, in my opinion. And we're entering crypto summer, and as Raoul Powell says, we're about to enter the banana zone. So let's see what happens. And I wanted to talk briefly on retail sales. Retail sales came out weaker than estimated at 0.1% compared to 0.3 estimated. And then retail sales ex auto was a negative 0.1 compared to 0.2% estimated. This weaker than expected retail sales shows that consumers are spending less money. They might feel a little bit strapped for cash, and they might be a little bit dire of their economic situation. Maybe their job situation isn't great right now, and as a result, retail sales and consumer spending make up about 70% of GDP. So that shows that the economy is starting to weaken. Maybe the Federal Reserve is looking at that. Hopefully, they'll still cut rates at least once this year. But that retail sales report is something that the Federal Reserve probably wants to see, but also they need to keep an eye on that at the same time.